Hello, hello. I'm testing the sound here. Test, test, test. Testing the sound. Test. Testing, testing, 1, 2, 3. Testing, testing, testing. Welcome to Finance for Females. I'm your host, Michelle Meyer, and today we're talking about two very different types of investments: traditional stocks in the long-standing telecom industry and cryptocurrency. They couldn't be more opposite. So the real question becomes, what type of investor are you? Do you like to gamble and take chances? No risk, no reward, they say. Or wait, is it slow and steady wins the race? Well, let's first take a look at the telecom industry. This industry has been around for what seems like ages, and the market is saturated. Though we see smaller MVNOs coming and going in the industry, the major players have stayed steady with Verizon, AT&T, and T-Mobile. Let's take a closer look at each company's financial performance and recent stock price trends. Verizon has a higher debt-to-equity ratio at 3.64% than T-Mobile at 2.06 and AT&T at 2.14, suggesting that it's slightly over-leveraged and has more debt. It also has a higher gross margin, suggesting that more money for expenses than its competitors. Verizon also has the highest operating margin at 21% compared to 9% of T-Mobile and 17% of AT&T, suggesting that it's running more efficiently than its competitors. T-Mobile has the lowest total revenue of these three at around 80 million compared to 133 million for Verizon and 169 for AT&T. It also has the lowest operating margin of the competitors, indicating it is spending more to operate the business. AT&T has the highest total revenue and profit for 2021, as well as the highest EBITDA. It has nearly double the assets as T-Mobile. So let's take a look at their stock prices. Verizon is at $38.16 with an approximate 20-point spread for the 52-week range. T-Mobile is at $147.77 with a 53-point spread for the 52-week range, and AT&T is at $18.95 with only a 7-point spread. So AT&T is most likely the most stable, but it only shows a forward dividend yield of 5.84%, whereas Verizon shows the 6.89 dividend yield. T-Mobile didn't pay out or chose not to report in their recent stock price chart, so their chart shows over time a lot of fluctuation. AT&T has been around since our grandparents' time and has proven to be steady as an investment over the years. So if you're risk averse, this may be a good one to look at. The telecom industry is highly competitive but saturated because the only way to gain market share is to steal customers from each other or wait until the next baby boom. So for all you slow and steady turtles out there, continue in telecom and select your brand based on your risk tolerance. Now let's pivot and turn to a completely opposite kind of investment, cryptocurrency. I'm sure you've heard of Bitcoin, but may not fully understand it. As defined in a book called Blockchain Bubble or Revolution, written by Neil Mehta, Adi Agashi, and Parth Detroja, they provide some insights. Bitcoin is a digital currency which is tangible, and the middleman is not there because it doesn't take a bank to track the balances. Bitcoin relies on a network of computers that keeps a public ledger called a blockchain, and it's based on intersubjective reality, which is where something is of value because other people believe it does have value, and it's run by mathematical algorithms. Interesting, right? There are over 600 types of cryptocurrency, so let's take a look at the prices of just three. One Bitcoin, for example, is worth $16,589.20, which has gone up 0.94% today. Ethereum is worth $1,616.52, which has gone up 1.25%. And Dogecoin is worth 10 cents, which has gone up 18.21% today. It's interesting to track these because they fluctuate greatly each day. I'm personally skeptical of crypto because it's so volatile and risky. Some people speculate it's going to be around for a long time and provides a very lucrative promise, and others think it's a bubble waiting to burst or collapse. This is primarily because it isn't regulated the way that banks and traditional currency is. Mind you, people are making millions of dollars overnight. The fluctuation can be extremely lucrative, but you can also lose big time and quickly. I'd recommend trying this with maybe some extra Christmas cash, but not to invest your third child's college fund in it until it becomes more regulated. But hey, that's me. How much risk are you willing to take? Hit me up in the comments section, post your thoughts, and be sure to subscribe to my podcast. Until next time, take care and make good decisions. Bye now.